Bismillahirrahmanirrahim. We were discussing about the behavioral classification of cost, and there we divide the total cost into fixed and variable. But the problem arises when there is a mixed cost. That is, part of the cost is semi-variable and part is variable. The fixed cost. So in that case, we need to split the mixed cost into two parts: how much is variable and how much is fixed. Now, there are four methods available. Number one is the accounts method. In accounts method, the in charge of the department is the person who segregate how much is variable and how much is fixed, which costs are variable and which cost is fixed. But in that case, there is some biasness in that method because the department heads may include more on the fixed cost rather than on the variable cost. Then the second method is high and low point method. It is known as range method. In that case, the fixed costs remain fixed within a certain range, but if the range exceed, even the fixed cost is going to be variable for the time being. Then the question is how to come up with the range method. There are number of, let's say, months where you are incurring certain cost, like let's say you got the telephone bill, and you will see in January, February, March, April, and so on, for the whole 12 months or 6 months, and see the range, where is the highest and where is the lowest. Now, see the hours worked or the calls made and the phone bill. Now, so how many hours worked, the highest level and the lowest level. Then find out the difference between the two, the cost difference and the hours worked difference. Now, if you divide the cost difference with the hours difference, so you will get the rate per hours cost variable. So if you take the total cost and take out the variable part of it, you may come across a fixed cost, and that fixed cost will remain fixed, either highest level or lowest level. Now, if within this level, the cost will remain fixed and variable rate will remain the same. But in certain cases, if you cross the limits or in between those levels, it is possible that the fixed cost may not be the same as the case. This is a drawback of this level or this method also. Now, coming to the statistical methods, again they are quite difficult, but since we are not using it in managerial accounting as such, because they are used for statistical purposes, so we are not going to discuss here. But even then, if you use a statistical method, still there is a problem, because you can't get exactly what is the variable and what is fixed. So this is basically an approximation of dividing the mixed cost into fixed and variable cost. And if you look into this illustration, which I just prepared for you, that there is 6 months telephone bill and the hours worked. And you look January, February, March, April, May, and June, you will see the highest hours worked is in March, that is of 250, and the lowest is in January. So if you take the difference of the two, hours worked 180 and 250, 70, and similarly the cost of 2,290 and 3,030, so the difference is 70 and 740. So if you divide the 740 by 70, then you will get the rate which is variable rate per hour, that is 10.57. Now, if you multiply this with 180 or maybe with the 250, you will get the variable cost. So if you take out the variable cost out of 2290 or 303, the fixed cost comes to 387.4. Now, generally this equation is used in segregating these variable cost and fixed cost. Y is equal to A plus B into X. Y is the total cost, A is the fixed cost, and X is the variable cost per unit. Per unit here means hours or maybe the units produced. So this is how we can segregate the variable cost and fixed cost. Now, if you look into the graphs of fixed cost or variable cost, you will see total fixed costs remain the same, but so far unit increases, production increases, the variable cost per unit decreases. But so far variable cost is concerned, it remains constant per unit, but if the production increases, the variable cost also increases. Now, the next classification is about according to the cost units. Here, cost unit means the unit where we want to ascertain the cost. and that unit can be, let's say, a unit of let's say chair or table, or maybe a shirt, or maybe a bottle of syrup, or so on. So what we do, we take out the direct cost of unit cost. Direct costs are those costs that can be specifically and exclusively identified with a particular cost objective. Here the cost objective is basically an activity. Indirect cost is contrast those costs which cannot be identified specifically and exclusively with a given cost objective. So direct and indirect cost. And I explained earlier that the direct cost is the direct material cost, direct labor cost, direct expense of cost, and the indirect cost is all types of overheads. Even the operating cost is indirect cost. Even the research and development cost is indirect cost. In certain cases, for example, in selling and distribution cost, though it is indirect cost, but in certain cases it has become a direct cost. For example, in case the product is such that you can't sell it without the package, without putting into a container, then in that case container cost is going to be the direct cost. So we need to split direct cost and indirect cost, because indirect cost, it is usually variable, so where the control is exercisable, but so far indirect cost is concerned, it is not that controllable because it is somehow fixed in nature. Then we have, according to controllability of cost. Controllable cost, a cost which can be controlled typically by a cost, profit or investment center manager. It means the in charge of the department is exclusively responsible for the incurrence of variable cost, which is a controllable cost. So for uncontrollable cost is concerned, these are those costs which cannot be influenced by the action of a specified member of an enterprise, but it is somehow maybe beyond the individual, maybe in the administrative level that cost has been incurred. So we can only ask the in charge of the department from the to explain or to account for the controllable cost, and we cannot fix a responsibility which is not under his control. And that's very, very important, because if you ask somebody to explain something, if there is any variance, the only variable cost variance can be explained. And so for fixed cost is concerned, it is very, very difficult for an individual manager to explain why it is so, because he's not consulted before that cost has been assigned to him, because it is generally an allocated cost. And in allocated cost means arbitrary bases are used to allocate the indirect cost to various cost centers or various cost departments. Then there is another base, time basis, cost classified on the time basis. Here, number one is historical cost, and these are the costs which are ascertained after these have been incurred. Generally, when the cost incurred, it is recorded in financial accounting, and that becomes the historical cost. Historical costs are thus nothing but actual cost. These costs are not available until after the completion of the manufacturing operations. So these are basically the actual cost, and we compare these actual costs with the budgeted cost if we have already planned for it. Predetermined costs these are future costs which are ascertained in advance of production on the basis of specification, all the factors affecting the cost. The other classification is classification by departments. So the entire organization is divided into two types of departments. The one which are producing department, which are directly engaged in the process of production of goods and services, and the other one is service department. Service departments are allied department. They are not directly involved in producing something, but they are assisting the production process going on. Now, in case of departmental cost, it's very simple that whatever department is engaging, or rather doing it, variable and fixed, whatever, the total cost is there. Now, producing department. Now, so far service department cost is concerned, ultimately these service department costs will also be shared, or rather allocated to the producing department. But the problem arises when a service department serving another service department. Then there is a problem arises how the service department cost is allocated to the other service department. Now we have to find out a way that we need to have some sort of arrangement that what percentage of service department goes to each producing department and service department. So first of all, we allocate the service department cost, and then two service department costs which are taken to the production department cost. Now in that case, we come to know the total production cost of, and then divided by the total number of units produced in each department, and we work out the cost per unit of each department. Now these are simple, but the difficult classification is the analytical classification. And the reason is, first of all, the cost itself is a term which is not used singularly, but it should be qualified. In isolation, cost doesn't mean anything unless you qualify it. Either put something in front of it or behind of it, like material cost, labor cost, overhead cost. Word simple cost means nothing unless you qualify it. So similarly, in this particular classification, we need to clearly mention what is a differential cost or incremental cost. Now, for example, differential cost is that you are doing a particular activity and you're incurring a cost of say 10,000 rupees, but if you add something else to that activity and the cost increased to, let's say, to 20,000 rupees, so the incremental cost is 10,000 rupees. So incremental means whatever you increase from the previous, and the increase in the cost is the incremental cost. Then the incremental cost or differential cost are used in decision making in a later on process. The next is the imputed cost. In fact, this is not the actual cost. This is an assumed cost. For example, you are using your own resources, your own funds, your own capital into a business, so that you don't charge interest on it. But you are foregoing the interest elements if you have deposited somewhere else. So for decision making purposes, we need to consider that how much interest would have been charged on these funds which you are using into the business. Now similarly, there is another called opportunity cost. Opportunity cost is, again, it's a lost opportunity which you can use and you are not using it. For example, you have the choice of doing one thing and you are not doing that thing and doing the other thing. So whatever you are losing in not doing the first choice, then that is the cost of the second activity. Let me give you another concrete illustration about it. For example, if a teacher can teach in one university and getting, let's say, 5,000, but he goes another choice of teaching another university getting 10,000 and another university getting 15,000. So if you teach University A, which give you just 5,000, so the opportunity cost is the best opportunity you are foregoing. In that case, the 20,000, the University B, not the University C. So this opportunity cost is the most important thing. Similarly, in production processes, we have limited resources, and if those limited resources are deployed somewhere else, so whatever we are losing, not employing those limited resources to the normal business, whatever we are losing that will be the opportunity cost for using it for the alternate purposes. So this is also very, very important cost, that is the opportunity cost. Then we have replacement cost. Replacement cost simply means that if you have something today and if you want to replace it with some other thing, so whatever cost you are paying to replace the existing one, and that cost will also be considered. For example, you got the material today and that material costing you, let's say, 10 rupee a unit. And if you are using it regularly, and if you use leaving that use of it and using it for some new orders, so whatever you are paying for replacing the first one, maybe rupees 10, instead of 10 you are replacing for 12. So instead of charging 10, you should charge 12 for the new orders, because you are to consider the replacement cost. Then we got a sunk cost. Now it's a bit controversial. What is sunk cost? Usually past cost is a sunk cost. Whatever is incurred already, that is a sunk cost, because you can't do anything about it. The example are very simple here, that let's say you got a machinery and you are not using it. So whatever money is spent on that machinery, that is a sunk cost. Okay, if that machinery has a saleable value, so the question arises, if that saleable value is sunk or not. So authors here differ. Some says no, the total is sunk cost, and some says no, what is not recoverable is a sunk cost. Then out-of-pocket cost. Generally, this is cash outlays, cash amount you spend out of your pocket. Cash may be in hard cash shape or maybe in some other assets case. So if you pay something from your pocket, means from resources which you have, so that is an out-of-pocket cost. Generally, it is a cash expenses, and we should consider it whenever we are accepting any decision. Then we got future cost. In future cost, we have some estimated budgeted cost. So what we are planning and how much cost we are going to incur in decision making, future cost is the most important one rather than the historical cost. Then we got discretionary cost. Discretionary cost basically is the cost which is on the discretion of the management you are going to spend. For example, it's up to the management whether they should incur advertisement cost on such a such thing or not, or how much budget they have been allocating to the advertisement, research and development expenditure. This is absolutely on the discretion of the management. Now, this cost in advance you have to select, you have to decide how much is supposed to be the budget for advertisement or research and development. Here again, you have the choice later on. If you want to reduce it, you can, but you need to, it is purely on the management that whether they have this much or not. Now, then the other one is the committed cost. For example, if you have done a certain contract earlier and no, you can't redo those contracts, you can't terminate those contracts, so those costs are anyhow you have to incur, and for decision making purposes, that cost is not relevant. So in that case, all these costs which we have just talking about, analytical process, we can divide into two, that one is relevant and one is not relevant. Was it the relevant one is the future one, the cost which you are going to incur, and irrelevant is which has already been cost which has already been incurred, so that will not be taken into account. Anyhow, so these are the important classification of cost. Now, we got cost methods and cost techniques. Now, the cost methods are basically two. One is job order costing, another one is process costing. But in job order costing, we have a breakdown like batch costing and contract costing. In process costing, we got average costing or continuous costing. But for services, we got operating costing. So let me explain what is basically a job order costing, how it worked out. Now, job order costing is a specific cost method where an individual place an order, come with the problem or come with the project, and then you start working on that project, and whatever cost is being incurred, you just keep on adding to that cost order. Now, features of job order costing, number one is production is against customers' orders, and the job is also according to the customer specification. The producer is not insert any of his opinion in it. Whatever is required by the customer, you are go by that. For example, if your car breakdown or something wrong with your engine or brakes, then you can only repair engine or brake, and you cannot just overhaul everything. So you must keep in mind what is the required by the customer, and you do accordingly. Then each job has its own characteristics and requires special attention. It's not that you do whatever you know. No, there is a specific requirement of each job, and you go by that each job requirement. And in this case, the job is sometimes stationary and people come and do the job. And sometimes we go to the site of the customer and do the job. So it all depends how the job is required, what is required by the job. Now, in a process costing, special feature of process costing is production of unit cannot be separately identified in the process. I will explain later what is the basic difference by job order costing and process costing. Now, here the production is continuous, and units keep on you keep on producing and keep on adding to the market, and then people go and buy it. But in the process and the job order costing, the customer place an order, and you produce the goods according to that order. The completed units of one process become the input of the next process, because here the production is by departments, process 1, process 2, process 3, like that the production goes on. If you look into any textile industry, for example, in spinning industry, so first process is, let's say, blow room. So what we do in blow room, we simply add cotton, and from there cotton is blown, and some cotton seed oil is separated, and then the labs are being prepared, and from there they goes to the drawings room, and in drawings room again labs are divided and labs, and then it goes to the carding section, and then from carding section it goes to common winding section. So it's a process, one department to another, the other, and finally from a finishing department where when the thread is yarn is produced and it is stored and then sell it out. So in process costing, the production is in stages, while in job order costing it is not in stages, but it is just in one place and you keep doing that job. Now coming to the differences between job order costing and process costing, the first one is product identified separately so far job costing is concerned. In case of process costing, product is not identified, they are the same. Production as needed. As needed means here that if you require it and you produce it, if you don't require it, you don't produce it. But in case of process costing, production is continuous, it keeps going on and on. Then specific customer in process costing, but in the general public, we are not producing specifically in process costing. We produce it and let the people come, and if they like it, they buy it. Then design and quality as per customer specification. Here in process costing, the design is normally standardized. It is all products are the same, size, same, everything is the same, even the quality, same. Then job started and completed, handed over to the customer. Here it's not that. Here the customer was readily available. Sale is already made. But in case of process costing, we produce it and then only the customer come and buy your products. Now, another important difference is that in job order costing, there is hardly any losses. But so for process costing are concerned, losses are bound to come. For example, waste are there in process costing. If I take back again to the illustration of textile, you can see in spinning mills, there are about 16 type of waste which are derived out of process. And the most important one, initial department, that is the blow room, and that is the cotton seed, जिससे तेल बनता है, बिनोले का तेल बनता है. Now, so, but the losses again, there are two types, normal losses and abnormal losses. Normal losses are those losses which are unavoidable, customary, usually they are there, and you have no control whatsoever. But abnormal losses are concerned, they are non-customary, they are controllable, and we need to separate. Normal losses is basically it's a part of production cost, but so far abnormal losses are concerned, they are not part of production cost. They have to be separated and they have to be cost separately. Normally we get insured about the abnormal losses, and we get compensated by the insurance company in case we prove our case that we have lost something which is under not our control. Now the job order costing, another difference is there's no joint or buy products. You are doing one particular job and handing over to the customer. But in case of process costing, you may come across that number of products are coming up from a one joint process. And in that case, if I give you the example, let's say you got a cow, and if you slaughter it, you can see how many types of products you are getting out of it. You can sell everything out that, maybe whatever remains, they're all saleable. So it's not just one meat which we are talking about. Hide and skin is separate, bones are separate, blood is separate, everything, hooves are separate, they are all saleable, but not in that case of job order costing. Then we have job order costing, easy to determine the value of work in process. For example, you started a project and it is not yet completed, so whatever cost incurred up to that stage is a work in process. But in case of process costing, it's very difficult to get the work in process cost, because it's such a difficult job. Normally, what we do as an auditor, we go at the end of the year and try to find out what is the cost, what is the process cost, how much is cost in process. So we can't simply close the mill. We keep on doing. We have to estimate. And those estimates are again rough estimates. For example, you have added the 100% material, but the labor and overhead still to be incurred. So at how much overhead or labor already incurred, again you need a simple estimate. So through the estimation, we come up with the cost of work in process. Now, in case of job order costing, we prepare job cost sheet. Basically, job cost sheet is that you open a page, or rather a performa, and you add the customer name, you add what order he placed, how many units he want, at what date we started, what date we completed. So that is the basic information. Then when you start working on it, then how much material, when you are adding, what type of material you are adding, how many labor hours you have been incurring. Then similarly, you have to add your overhead part of it, and then total cost you incurred. And if you want to charge your customer, they are normally on the top of your cost, you add some percentage. And that percentage is your profit, which you add to the customer. Now, in case of process costing, we don't prepare as a job cost sheet because it's a cost of production report. We prepare, each department prepare its own process account. In what cost incurred in each process, we keep on debiting the process account. And then after finishing one process, when it is shifted to the next process, whatever cost we incurred, we shift it to the next process. Now, next process, first of all, get the cost from the previous process, and they keep on adding further cost on it. Not necessarily the second process may involve material cost, and maybe simply the conversion cost, that is the material cost, the labor cost, and the overhead cost. And similarly, when it goes to the second process to third process, finishing department, so we keep on like this, a production statement for each department. An important thing is that for each department, we need to work out if there is a losses in any department, normal or abnormal, if there is any waste in each department. Interesting thing is when we look into it, that waste is also there, which is saleable and which is toxic. If it is toxic, we might incur a cost, but if it is saleable, we will recover some of our cost. But when we do the numerical questions, then I'll show you how these work. The other thing is, on each job, we can work it out the profit or loss. But in process costing, it is hardly difficult because the final product is sold out in the market. So process 1, 2, or 3, you can't work it out because they are the cost center. They are not the profit center because they are not selling it from there. Sales department is different. Job order costing operation is usually on site base, and particularly these construction contracts only on site base. You can't just start anywhere and take it there. No, the job is there. I mean, you go to the site, take your machinery over there, your labor over there, your infrastructure, and then then build a house for the customer as required. But here, the production moves from one department in the process costing to the other department. It keeps moving on. So these are the basic difference of job order costing and process costing. Now, after cost methods, we have some costing techniques. Now, the costing techniques are simply the way how we do the costing. Now, there are a number of costing techniques like marginal costing, absorption costing, standard costing, budgetary control, relevant costing, and then other areas like transfer pricing, pricing of products, and so on. We will discuss these later on, but today I'm just concluding one thing here, that there is a third part of it, the cost method, that is the operating costing. You know, this service costing is a difficult job in particularly because how to cost services, it's not that simple. But we do try that how the service costing is done. For example, service costing is done in hotel industries, in transport industries, in audit firms, and so on. So what we do there, we simply take a customer's request, and accordingly, for example, in transport company, if you look at it, we have a truck or we have a buses, so we ply them and we carry passenger, we carry luggages, and so on. So how the costing is going to be done? The cost of the bus or the cost of the truck, the depreciation of it, the road license of it, the driver salaries, the maid salaries, and similarly the insurance of it. So these are the standing charges we have to add. But on the other hand, if you look into the petrol of repair and maintenance, lubrication, and so on, they are the variable cost. So here there is some problems that we need some standing cost as well as the variable cost. And then we put together, that is the total cost. Now here the cost unit is again a problem. Should we calculate per kilometer, or should we calculate per passenger, or should we calculate per ton carried, and so on, or per day cost? So this is how simple the operating costings are. And in case of a hospital or hotels, we have the in hospital per patient, or per operations, per day room occupied, in hotel cases per customers, or rather per room occupied, per night room occupied, and there are various cost units in those cases of operating costing. So we will come across when we do some numerical questions on operating costing, job order costing, and process costing. Now, so far techniques are concerned, we will take later on, क्योंकि techniques जो है इसमें फिर individually हमें जाना पड़ेगा कि marginal costing क्या है और absorption costing क्या है, उनमें difference क्या है, marginal costing से accounting कैसे, मतलब उसमें cost of production कैसे बनती है, और इसी तरह absorption costing में क्या है. Difference is not much, but still marginal costing is mostly used in decision making in managerial accounting, because the absorption costing, everybody is using absorption costing, but so far decision making is concerned, we use marginal costing because there is a lot of things to be done there. Then similarly budgeting control and budgeting, we do prepare budgets every year, and then we divide into various quarters or various months, and then different types of budget we prepare. Then there are some new techniques of coming up in the budget sections also, like zero-based budgeting is there, participating budgeting there, rollover budgeting is there. So these techniques are going to be discussed when we come to the budgetary control techniques. Then we have standard costing. Here we work out standards for each unit we produce, how much raw material quantity, price we are going to consider, and then how much is labor hours required for a production of one unit, and what will be the rate per hour. Should we use one single type of labor, or we use different types of labor? Similarly, we use just one material or different types of material. What should be the combination of those material or labor costs? Similarly, overheads are going to be added. The problem is the overhead basically, because you need to allocate overheads into your production, and there we have simply various methods of allocating the overheads. Single rate can be used, departmental rate can be used, ABC costing can be used. So these are the detailed subjects which will come across later on, and we do some exercises on this. When we receive job from any customer, so we have to open a job cost sheet. Sometimes we call it job order also, and there we note certain details about the customer. The name, his address, then the job specification, the number of units he wants to produce, and similarly when we want to start this job, and then when we are going to complete the job. And we also give a certain number for each job so that we can keep allocating cost to a particular job whenever we use our resources. Now in job cost sheet, we have three major columns. One is for material cost, the other one is for labor cost, the other one is for factory overhead. And whenever we issue any material, we have a requisition, and against that requisition we have issued the material for that particular job. Similarly, when we allocate workers to any job, so we also record which one is going to be work on that particular job. So similarly, we have to add overheads also in that particular job using a certain base. Now that job keeps on going on, and once it is completed, then we add on the total cost of material, then the labor cost and then the overhead cost. Then we work out a summary that these three are the production cost, and then we have to add something on administrative cost and the selling distribution cost, and that will be our total cost. Now in this total cost, we have to add certain profit margin, and then we ask the customer to pay the respective price. Now this is how the job cost sheet is going to be completed. You name it, either it's a job cost sheet or it's a job orders, but that is how we can complete it. But the only problem in this case is material and labor is okay because you're specifically allocating material and labor to a particular job. But so far overheads are concerned, we need to allocate on a certain basis. Now let's take up an exercise how in a job order cost sheet we allocate the overhead cost. Now let's go to an illustration. That is, a company known as Interwood manufactures furniture to customer specification and use a job order cost system. A predetermined overhead rate is used in applying manufacturing overheads to individual jobs. It's clear that each job we have to work out how much overheads to be allocated, because sometimes it's not only the one job, we have been using so many jobs at a time, so we need to work out a rate which is applicable to each job. Now in Department 1, overhead is applied on the basis of machine hours, and in Department 2 on the basis of direct labor hours. It means simply that this job will go through two departments, Department 1 and Department 2. In Department 1 we are going to use machine hours rate, and in Department B we are going to use direct labor hours rate. At the beginning of the current year, management made the following budgeted estimates to assist in determining the overhead application rates. Department 1, direct labor cost is 30 million, and Department 2, direct labor cost is 22.5 million. Direct labor hours in Department 1 is 20,000, and in Department 2 it is 15,000. Manufacturing overheads for Department 1 42 million, and Department 2 it is 33.75 million. Machine hours in Department A is 12,000 hours, and in Department B it is 7,500 hours. Now the production of custom furniture ordered by the city, job number 58, was started early in the year and completed 3 weeks later on, say, January 31st. The records of this show that the following cost information, that in Department 1 on this particular job the material cost was 1.01 million, and in Department 2 material cost is 760,000. Then direct labor cost in Department 1 1.650 million, and in Department 2 it is 1.110 million. Now direct labor hours in Department 1 it is 1100, in Department 2 it is 740. In machine hours in Department 1 750, and in Department 2 it is 500. Note it that in Department 1 we are going to use machine hours rate, and we are going to use labor hour rate in Department 2. Now selected information for the January is given below. Direct labor hours month of January is 1600 hours, and in Department 2 1200 hours. Machine hours for the month of January 1100 hours, and it is 600 hours. Manufacturing overhead incurred in January. Do remember the rate is calculated on yearly basis, and now we are talking about month of January. Manufacturing overhead incurred, these are the actual overheads, that is 3.901 million, and in case of Department 2 it is 2.654 million. Now here we have to compute the predetermined overhead rate for each department, Department A or Department 1 and Department 2. So if you look into it, that how the rate are going to be calculated, simply take the estimated overhead and divide it by the base hours. Now in case of Department 1, the estimated overhead for the year 42 million, and the machine hours are 12,000. So the rate comes to 3,500 per machine hour. Similarly for Department 2, the budgeted overhead was 33.75 million, and the labor hours was 15,000. So in this case the rate per labor hour is 2,250. Now from here we have to work out the cost of this particular job. Now in job direct material cost, Department 1 and Department 2 again 1.01 million, and Department 2 material is 760,000. Total is 1.770 million. In case of direct labor cost, again it is directly allocated because they are the variable cost. So they are incurred only on a particular job when the job is undertaken. So direct labor cost is also given 1.650 million, and Department 2 it is 1.110 million, and total is 2.760 million. So prime cost, the total of the two, material cost and labor cost, is the prime cost. Now in this we have to add manufacturing overhead. Now the manufacturing overhead calculation, the working, if you look at it, that we have to use machine hours for this job in Department 1 and labor hours in Department 2. So if you see the working, it comes to 2.625 million in Department 1 and 1.665 in Department 2. So total cost comes to production of this job. So for Department 1 is concerned 5.285 million, and Department 2 it is 3.535 million. Total cost comes to 8.82 million. So this is how the job cost is allocated in a particular job: material, labor, and then overhead. Do remember, overheads are always applied rate. It's not actual, because it's very, very difficult to determine for each job individually how much overhead is going to be incurred actual. But we always use a rate, and from that rate we add the cost to that particular job. Now, coming to the journal entries about this job order, that if this job is, say, sold for 14.7 million, so you have to make two entries. One is account receivable, credit sales, and the other one is cost of goods sold to finished good inventory. Now, another point here is whether the overheads are under-absorbed or over-absorbed over a year, not for this particular job. Let's see if we look into the over a year on this particular job. So we consider total overhead budgeted, and then how much is, actual, and the how much is applied. So that will be the under-over-applied overheads. But in this particular job, you look what we did. In January, we incurred 3.901 million in Department A and 2.654 million in Department 2. So total is 6.55 million in the month of January only. Applied is, that is 3.850 in Department 1 and 2.7 million in Department 2. So total comes to 6.550 million. So in case of Department A, there is a under absorption because actual is greater than absorbed. Actual is greater than applied, so there is under absorption of 51,000, and in Department 2 there is a over absorption of 46,000, and the nutshell, there is under absorption of 5,000. Now, overall is not that bad that you have just under absorbed by 5,000. It simply means that your actual overhead is 5,000 greater than what you have charged to the customer. But if you look from department to department, it's different. In Department 1, it is under absorbed, and Department 2, it is over absorbed. So it's compensated basically, but it's again not a good idea that there should be so much difference in under over applied, because later on when we come to ABC costing, you will find that distortion will not be there. So we will come to this later on. Next is the process costing method, which we are going to discuss, and the special features of process costing are: production of unit cannot be separately identified in process costing, whereas in job order costing or batch costing, the production unit retained its identity. Unit cost has to be based on the average cost of the process, because it's not like that you start a job alone and then you keep adding the cost on it, but in a process costing, the job is continuing and you have to work out an average cost base. Secondly, the completed units of one process becomes the input of next process, unless it reaches to the final process and then to the finished goods storeroom. Third, in the course of processing, several different main product, joint products, and byproducts may arise. Now here I can just give you a simple example that if, let's say, you slaughter a cow, so you can see so many products are coming out of that cow. Meat is one thing, hide and skin is another thing, bones are another thing, blood is another thing, and so many other eatable you can see in the case of a cow. Similarly, if you look into the furniture industry, there is a log of wood that is the raw material. Then you cut into different pieces, and there in different pieces you have to do according to which type of furniture you want to, sofas or beds or chairs or tables. Accordingly you cut those pieces, and you can see a lot of waste in that case. So the wood which are going to be used in making the furniture is the main product basically. But so far those cut different wood pieces which are not going to be used in furniture making, they are also used for let's say firewood, etc., and they are saleable also. So that can be another product. And there is a sawdust, that is another product which also can be used. So there are different types of products can be resulted out of the process cost system. Now the physical quantity of output of process may be less than the input of the quantity. It's always like this, that you started, let's say, for 10,000 kgs, you might not get output of 10,000 kg because there may be some evaporation and some loss is there, and there may be some other things, normal or abnormal losses. So that's why the input and output cannot be the same in the process costing. This can be due to the nature of process, evaporation or reaction, etc. So there can be many causes of this difference. The cost, for cost purpose, each process constitutes a cost center. And the cost per unit is arrived at by dividing total cost of the cost center by the number of units of output. Now, let me just explain you one thing here very clearly, that we are talking about process as a cost center, but lately people are of the opinion that if a cost center is taken, only the cost center, the whole cost is going to be transferred to the next department, then there is no motivation to the first department for controlling the cost or for reducing the cost, because he knows whatever cost he incurred, he will shift it to the next department. तो इसलिए पहले वाले डिपार्टमेंट के पास आपके पास जो है कोई वो चॉइस नहीं, यानी आपके पास कोई वो इंसेंटिव नहीं है कि आप उसको कॉस्ट को कम रखें, क्योंकि आपने तो अल्टीमेटली पास ऑन कर देना है. लेकिन अब जो कहा जा रहा है कि जी इसको कॉस्ट सेंटर की बजाय इसको प्रॉफिट सेंटर ट्रीट किया जाए, और हालांकि प्रॉफिट सेंटर सेल तो नहीं होगी प्रोडक्ट डायरेक्टली फ्रॉम दिस डिपार्टमेंट, क्योंकि इसने अगले और उससे अगले और उससे अगले डिपार्टमेंट में जाना है, इसलिए इसको हम प्रॉफिट सेंटर कैसे बनाएं. तो आइडिया वाज कि जी इंस्टेड ऑफ सेलिंग द प्रोडक्ट्स व्हाट यू प्रोड्यूस इन डिपार्टमेंट ए, वट एवर शेप और फॉर्म इट इज, you better use the standard cost rather than the actual cost, because standard cost is predetermined cost which is going to be sent to the department 2, let's say from department 1. So department 1 was know that my cost is going, whatever I produce, it is going to be sold to department 2 at that price. So he will try to bring his cost down, and there may be some profit you can show over there. Also, so similarly in department 2, he knows at what price he is going to get this cost from the previous department. So he will also be very clear, because he can plan properly, because he know this is going to be my input cost, and then he starts putting his own cost. And normally in department 2 or 3, we don't add material cost as such in certain cases, but we add labor and overheads. So he has the control on labor and overhead, and he already agreed the cost from the previous department. So this is a very important thing here, that it should not be only a cost center, it should be taken as a profit center as well. And there are industries where this system is going on, that they take it as a profit center. Now let's have a brief review about the difference between these two cost systems. Job order costing versus process costing. In job order costing, products are identified separately. It's very clear. If you want to build a house, the house is specific for you. You got the drawings and you have the design and you do it accordingly. But so far, in process costings are concerned, products are identical. They are the same. If you, let's say, look at the Panadol tablet, it is all the same. Even the weight, even the color, even everything is the same. Now, second is products as needed, that by the customer as needed. As and when the customer needs, you do the job. But in a process costing, production is a continuous basis. You keep on producing for stocks. It means in case of a process, job is already sold out. Though it is not handed over, but it is already sold out. But in case of a process costing, it is not yet sold out. You produce it and put it in stock and then sell it. Third is customer is also specific in job order costing. But in case of a process costing, we don't produce a Panadol for a specific person. No, we don't. Similarly, design quality as per the requirement of the customer in case of a job order costing. But here it is a standardized, substitutes are available, it's a standardized product. Then job started, completed and handed over to the customer, but output of one process becomes the input of another process. And finally, from the final process is become the finished goods. Now losses are not there so far in job order costing is concerned, because if there is any loss, it's not customer's fault, it's not customer who is going to bear it. But in case of a process costing, there can be normal losses and there can be abnormal losses also. And we do account for those losses in our accounting. Then no buy or joint products in case of a job order costing. But in case of a process costing, different products from the same process. Easy to determine the value of work in process in case of a job order costing. Because if you started a contract, let's say building a house, so you keep on adding cost and you can see at this level, at this stage, this much cost is incurred. So that is the work in progress. But in case of a process costing, it is quite complicated to work out the cost of the work in process. Because if I can give you an example of, let's say, textile industry, and particularly in spinning industry, there are 8 departments. And each department, the production is going on throughout the year. And if you want to work out how much is still in process, it's hardly difficult. It's really very, very difficult. Because first of all, we can't stop the production line. We have to continue entire year. So we need to estimate only. So in case of a work in process costing, we need to do certain estimates. हमने देखा कि job order costing और process costing में lot of difference. So when we are preparing a job cost sheet and when we are going to prepare a process costing, inshallah we will see next time, and that how the process accounts are prepared. And thank you very much.